Crypto is loud. Too loud. Every week, there's a next big thing. Every cycle, the same hype loops play out. Flashy marketing, recycled white papers, vapor promises dressed as innovation. But beneath the noise, far beneath the influencers, the pump groups, the fleeting narratives, is a quieter current. A current built on real architecture, real adoption, and real alignment with the systems that actually run the world. And if you know where to look, that current points directly to Hedera HBAR. This isn't your typical altcoin pitch. This is about a network that's been steadily engineering its way toward global relevance. Not through speculation, but through precision. HBAR doesn't chase headlines. It doesn't sell stories. It builds. It builds partnerships with Fortune 500s. It builds enterprise-grade infrastructure. It builds in places that most crypto projects can't even access: government systems, regulated industries, institutional workflows. And while most people were busy trying to 10x on hype, HBR was architecting the future in silence. But silence never lasts forever, because heading into 2025, for brand new developments are converging, and together, they form a thesis that's impossible to ignore. These aren't recycled updates. They're fresh catalysts with long-term implications, and they reveal why Hedera may no longer be early, but it's definitely not late. So if you've been watching from the sidelines, or worse, ignoring HBAR completely, this is your reset. This is your full-spectrum view of a project the masses still underestimate, and the sharp money is quietly accumulating. Let's peel back the layers. Let's break down what's really happening behind the scenes. Let's talk about 4 brand new reasons why HBAR could explode in 2025, and why, if you're serious about asymmetric opportunities, this might be the single most important breakdown you'll watch this quarter. Let's begin. 1. Government-grade adoption. The public sector wakes up to Hedera. For years, crypto has tried, and mostly failed, to gain meaningful traction with governments. It's not for lack of effort. But the truth is, most blockchains weren't built to meet the standards of regulated industries. Speed, cost, scalability, sure. But compliance, finality, transparency, and auditability? That's a different game entirely. And it's in that game, the serious, slow-moving, high-stakes world of government infrastructure, that Hedera is quietly winning. CBDCs, carbon markets, and beyond. In 2024, whispers turned to pilots. And pilots are now turning into frameworks. More than a dozen governments and institutions are exploring Hedera's technology for national use cases, including central bank digital currencies, CBDCs, that require instant finality, low-cost transactions, and immutability without sacrificing energy efficiency. Carbon credit markets that demand traceability, accountability, and fraud-resistant verification. Land registries, digital identity systems, and public record-keeping, the backbone of functional governance, that need both speed and incorruptibility. These aren't just possible use cases on some pitch deck. These are live, in-progress explorations, many funded or supported by bodies like the HSBC-backed Global Blockchain Business Council, UN organizations, and sovereign agencies. And in almost every case, Hedera's consensus model built on Hashgraph, not blockchain, is what gets the green light. Why? Because it offers asynchronous Byzantine fault tolerance, ABFT, a level of mathematical security that not even Bitcoin or Ethereum can claim. The Federal Reserve tie-in. One of the most compelling signs of deeper institutional acceptance came through Hedera's involvement in FedNow integrations via some of its council members. FedNow is the U.S. government's real-time payments infrastructure, a system that will define the rails of digital money flow over the coming decades. When payment processors and banks already inside that system begin working with Hedera, it's not a stretch to imagine Hedera becoming part of the next-generation money layer. Not in theory, but in practice. This isn't retail-friendly hype. It's infrastructure-level integration. And it happens slowly until one day it doesn't. Why it matters? Crypto investors often chase volatility. But the real wealth is built where the masses aren't looking, in the places that are harder to understand, slower to develop, but ultimately more permanent. Government adoption isn't a headline. It's an inevitability for any project that wants to be around in 2030 and beyond. And right now, Hedera is positioned closer to those corridors of power than almost any other digital asset, period. This is how a utility token becomes a critical utility. This is how protocol layer infrastructure becomes nation-grade infrastructure. And this is just the beginning. The Enterprise Council Advantage, Hedera's unrivaled corporate power base. In crypto, partnerships are often fluff, announcements with no follow-through, names with no weight, and promises that dissolve in silence. But Hedera's council is not a marketing gimmick. It is a governance structure backed by titans, and it may be the most strategically underpriced asset in all of crypto. Hedera's governing council isn't made up of random DeFi projects or startups trying to find product-market fit. It's comprised of some of the most powerful enterprises on Earth, and together they don't just invest in the network, they run it. What is the Hedera Governing Council? At its core, the council is a group of 39 global organizations from diverse industries: finance, telecom, manufacturing, tech, retail, energy, aerospace, and academia, each running a node on the Hedera network, each granted equal say in governance. Unlike many crypto projects where governance is delegated to anonymous whales or developers, Hedera is owned and operated by entities with real-world accountability. Here's what makes it different: distributed and decentralized by design. No single company can dominate decision-making. Each member gets one vote. Google has the same governance power as a university or a bank. Rotation and term limits. Council seats aren't permanent. New voices rotate in, ensuring no long-term monopolization of power. Global diversity. Members are spread across continents and sectors, making Hedera geopolitically resilient and industry agnostic. Who's on this council? Some of the members include Google Cloud, IBM, Boeing, LG, Nomura, Dell, Standard Bank, Deutsche Telekom, Shinhan Bank, UCL, University College London, Avery Dennison, Magalu, ServiceNow, Hitachi. This is a who's who of global infrastructure. These companies don't gamble on pet projects. They commit where there's real-world alignment and long-term upside. They have billions in assets, reputations to protect, and regulatory obligations to uphold. And they've chosen to run on Hedera, not Ethereum, not Solana, not Avalanche. Ask yourself, what other crypto network is governed by Google Cloud and Boeing? What other project has IBM and Dell building tools directly into its ecosystem? Enterprise-grade use cases in production. These aren't passive stakeholders. Many are actively using or integrating Hedera into real enterprise workflows. Avery Dennison's Atma.io is tracking over 30 billion products using Hedera, from apparel to food to medicine, giving consumers and brands full lifecycle transparency. ServiceNow, the backbone of corporate workflow automation, is exploring how Hedera can bring real-time verification and trust into global operations. Standard Bank, the largest African bank by assets, is piloting solutions that can redefine financial infrastructure across the continent. LG has launched ArtLab, an NFT platform built on Hedera that targets mainstream users rather than niche crypto audiences. Dell is researching how Hedera can provide decentralized trust in data provenance for AI and IoT systems. Each of these integrations feeds into the same flywheel. Corporate trust leads to utility, utility drives network usage, usage drives token demand, demand raises value. And it's all happening without the noise. Why it matters. Retail may chase meme coins, but institutions build ecosystems. And institutions trust other institutions. That's Hedera's secret weapon. When billion-dollar brands with decades of infrastructure decide to build on a crypto network, it signals a paradigm shift. Not just for Hedera, but for how blockchain or Hashgraph is finally moving from speculation to production-grade infrastructure. Most crypto projects promise partnerships. Hedera is governed by them. That's not just bullish, that's foundational. This isn't mass adoption someday. This is mass adoption happening, just not where crypto Twitter is looking. Institutional validation is no longer a theory, it's happening in real time. There's a massive misconception in the crypto space that institutional adoption is something that happens overnight, a sudden influx of capital and headlines from BlackRock, Fidelity, or some high-profile bank. But that's not how it really works. Institutional adoption is a slow burn, quiet, calculated, and deeply strategic. And that's exactly what's happening with Hedera right now. Hedera isn't just waiting around for institutions to notice it, it's already governed by them. And that changes everything. Take a look at the Hedera Governing Council. We're talking about a group of global powerhouses: Google, IBM, Boeing, Standard Bank, Dell, Deutsche Telekom, Ubisoft, and more, actively running nodes, shaping governance, and committing to the future of the network. This isn't a list of partners that wrote a blog post once and disappeared. These are governing members, directly involved in the network's operation. This level of trust, transparency, and long-term alignment is almost unheard of in crypto. Most chains are run by anonymous validators, opaque foundations, or pseudo-DOS that bend to the will of a handful of insiders. Hedera flipped that model on its head. It gave institutional players a front-row seat and actual control over network decisions. And guess what? The impact is already snowballing. Dell is exploring distributed ledger use cases for edge computing and data sharing. IBM has showcased Hedera in its enterprise solutions stack. And as ESG regulations become more aggressive worldwide, Hedera's energy-efficient architecture is putting it in prime position to become the default choice for compliant, scalable blockchain infrastructure. Here's the deeper signal most people miss. These aren't companies that make impulsive moves. They don't adopt tech based on hype. They deploy capital and resources where they see long-term strategic value, and they've bet on Hedera. Now imagine what happens when more institutions start connecting the dots. When traditional finance wakes up to a DLT that doesn't choke on gas fees, doesn't need proof of work, and actually delivers on regulatory alignment and enterprise-grade throughput. That moment is coming, and Hedera's already passed the due diligence phase. When the tipping point hits, it won't be a slow crawl. It'll be a surge, and those already positioned won't be just lucky. They'll be informed, because institutional adoption isn't coming. It's already here, and it's quietly unfolding on the Hedera ledger. The bigger picture. By now, it should be clear. HBAR isn't just riding momentum. It's building momentum. Each of the 4 reasons we've explored, from its unmatched enterprise partnerships to its regulatory-ready framework, its blazing fast consensus model, and its quiet but steady expansion into real-world markets, points to one truth. This isn't hype. This is architecture. While most crypto projects are still fighting for market fit, Hedera already has it. While others are pivoting with every market shift, Hedera is executing a blueprint years in the making, backed by institutions that don't gamble. It's tempting to compare HBAR to other layer ones, but that misses the point. Because Hedera isn't trying to win a popularity contest. It's trying to become invisible infrastructure, the kind the world uses without even realizing it. This is what it looks like when a network skips the influencer game and builds with governments, banks, energy giants, logistics leaders in silence and on schedule. And if you've been in crypto long enough, you know how this plays out. By the time the headlines catch up, by the time retail starts chasing green candles, the asymmetric opportunity is already gone. So the real question isn't whether HBAR can explode in 2025. The real question is whether you'll be early or everyone else. That's why what you do next matters. The window is narrow, but the signal is loud. Let's zoom out. In an industry overflowing with promises, pivots, and vaporware, HBAR is playing a different game. While most projects are chasing the next speculative wave, Hedera is quietly laying the foundation for something much bigger, something built to last. This isn't just about a coin going up. It's about a network solving real problems at enterprise scale with actual partners, not just pitch decks. From Fortune 500 boardrooms to national government pilots, the Hedera ecosystem is becoming the go-to layer for institutions that need security, finality, and scalability without compromise. Now here's the part that matters. The crowd will wait for headlines. The crowd will wait for price spikes. But by then, the real positioning will already be done. 2025 won't reward people who follow noise. It'll reward those who listen for signal. And right now, that signal is getting louder. Ask yourself, are you reacting to narratives or preparing for rotations? Are you chasing short-term pumps or positioning for long-term power moves? Are you reading charts or reading the chessboard? Because if you're here to just speculate, HBAR might not be loud enough for you yet. But if you're here to build conviction before consensus, to act before the window closes, to understand the infrastructure beneath the next cycle's winners. Then you're exactly who this message was for. So here's what to do next. Like this video, if this gave you the clarity most top altcoin lists never will. Subscribe if you're ready for deeper breakdowns, smarter narratives, and research that stays ahead of the curve. Share this with one friend who's serious about crypto, not just crypto Twitter. And drop a comment. Tell me what you think HBAR's biggest catalyst will be in 2025. Remember, there are projects that make noise, and there are projects that make impact. HBAR is building quietly now so that when the world finally looks, it's already too late. Position early. Stay informed. Move with intention. This was more than a prediction. It was a signal. And the next move is yours.